Let me now bring on board Devin Choksey, Managing Director of KR Choksey Securities. Devin, morning. Thank you for joining us. Devin, is there reason to be optimistic this Tuesday morning because globally things are stable? Rupee has also appreciated against the dollar, and the dollar index has retreated against all other major market currencies. Are you advising your clients that in the near term we have a bottom in place and it's time to buy?
Good morning, Nikunj. Well, I think there are many things which have probably, started working for the market to, stabilize. I think some of the positive statements which are coming in from the government sides. At the same time, I think most of it, which you have explained just now about the rupee which is stabilizing. So I think could possibly mean that some amount of short covering led buying take place in this market. To my mind, I think if one wants to buy with certainty on the timing front, then probably I think they will have to buy above 4920 levels. Till that point of time, I would think that the market would possibly continue to stay in the range of 4720 and 4920. Any meaningful upside for the market would be, I think, first indication would be at 4920 levels and thereafter at 5000, 5050 levels. Till that point of time, I don't think that any serious long-only investors would come into the market. Yes, for the traders, I think it makes sense to, take some long position and maybe try and sell puts of somewhere around 4500, 4600 or 4400 levels, wherein I think you get the advantage of beginning of the month as far as the time value of money on those puts and probably trade on the Nifty front. But generally, the market as I see it at this point of time stays in the range of 4750 and 4920.
Devin, morning. Talks are getting louder as to how there is a stronger case this time around that the RBI may actually cut rates in the June policy itself. Do you think the market is beginning to digest that and price that in?
Well, it would be good to see that I think they start cutting down the rate of interest, because as we always believe that I think once you start cutting down on the rate of interest, probably with a lag effect of 2 quarters, you will start actual impact coming onto the economy. So if that process has been continued in the last quarter, probably I think it should further continue in this quarter, and we should be seeing the kind of a rate cut taking place now in this particular period. Now, whether it would be a too meaningful a rate cut or whether it would be a 25 basis cut, I think that's something which one can debate upon. But the intention is clear that the rate of interest is reduced. Then in such situation, overall environment promises to come back to normal somewhere in the second half of this financial year. So one would look at this particular possibility with some amount of optimism, of course.
Is it too early to switch sides? When I say switch sides, sell consumer names and buy high beta and infra?
Yeah, Nikunj, I wouldn't immediately jump into, buying the high beta stock still at this point of time. To my mind, I think the more amount of money which I think should come into the Indian market, I think they are not coming. And even if whatever sporadic buying that we are seeing currently in this market is largely driven by the short covering and I think amount of money coming in through the trading funds. So there is no surety of that money sustaining over a period of time. Few factors could possibly demand that one could buy into high beta stocks. I think that one factor that one will have to look at very clearly is whether the government policy actions start taking place. And particularly I am of the view that instead of giving clarification on a day after day basis by the finance ministry and their officials, I think they should be once and for all, make the decision clear on the retro tax. If retro tax decision comes out very clearly, then probably you would see the flow of money coming into the market. And this flow of money coming into the market would build a certainty for the market up move. And then you could possibly consider buying into some of the high beta stocks. But till that point of time, I think buying into the high beta stocks would be too risky, because you would be playing against, the kind of moves which probably government may, bring out from time to time, which will bring down the markets. So that is the reason for which I am not too keen to buy into high beta stocks. I would stay put from buying some of the larger high beta stocks. Rather, I would concentrate on some of the safer bets, and those bets could include, banking, infrastructure space. Probably, some of the pharma companies, they would probably go in the portfolio in this kind of period, so that at least one would remain relatively sure about the upside into the market from these stocks.
Even to your mind, what is the real and correct price level for Tata Motors? It is certainly not 340 and it is certainly not 220.
Nikunj, I don't know, what would be the right price level, but if I look at the fundamentals of the company, I would probably think that against last year's 34.5, 35 rupees earning per share, if this company ends up producing, even if the flat result is produced in this particular year, worst case of a scenario, probably I think this particular price level would demand a buy in this kind of a stock. Because what we believe is that over a period of time, I think this company would overcome the kind of a concerns that most of the analysts have raised after the last quarter's results, and particularly in the JLR margin front. As I have understood, I think the new launches have taken the toll on the margins for the time being, which may not be the case, I think, going forward in subsequent quarters. And assuming that even if they end up maintaining single-digit growth on the volume front on JLR portfolio, probably this company could, on a safer side, make an earning per share of around 37-38 rupees, and I think in a good case, probably around 39-40 rupees. So from that point of view, I think 35 would become a very, very safe bet, I think, to buy on an earning basis this company, which would, I think, translate to what kind of a P? I think ridiculously low P of less than 5. So from that point of view, certainly I think one would like to buy into this particular stock going forward for investment portfolio and stay invested thereafter.
When we started the calendar year, Pantaloon Retail had a debt equity of about 4:1. Now after their demerger of Pantaloon business to AV Birla Group, and after stake sale to Bobbert Pincus, the debt equity will come down from 4 to about 2.2. So given the kind of backdrop we are in, is Pantaloon Retail a good contra buy?
Well, I think I have not fully understood, I think, the complete new prospects, I think, that this company is now throwing up in this kind of a restructuring mode. I do understand the kind of a debt retirement program, and for which I think they are working hard and they have actually started showing result. But beyond this, I think what next? I think where exactly they will be producing higher amount of revenue growth and profit growth. Will those kind of product lines or the verticals would end up producing higher amount of margins? I am not too sure on that front. And neither I believe that the company has given any kind of a direction or the clarification on this particular front. I guess it's evolving. Let's put it this way, that if one wants to buy relatively, I think with the hope that things would turn out better for them, then there could be a possibility of buying in some amount of softness into the market into this particular stock. But if you want to buy with surety, then let's wait for the direction coming in from the management on this front as to how the margins would increase, how they would be in a position to handle higher amount of volume growth, and which all the verticals ultimately would end up, I think, be the future of this company. So all of these questions are more relevant going forward for us, I think, when we want to look at this company for serious portfolio inclusion.
Devin, what's your fundamental take on JP Associates? Because there are talks, and there were talks yesterday as well, that perhaps Yamuna Expressway is close to actually being operationalized. All the commercial viabilities and checks have been already done, and it is going to be, near operational very soon.
Well, I think among the infrastructure space, we haven't always liked, I think, the road space for sure. I think because we don't think that the kind of margin that one would expect out of them would be, I think, so very high. They would be always vulnerable to some amount of high cost pressures and resistance on increasing the tolls. Particularly, I think with the formula in, probably they may be allowed to increase it, but at the same time, I think most of the operators would face challenge over in this particular times in this activity. So from buying into any of the infrastructure asset companies, probably I think we like the seaport as the best option, because we always find that in seaport business, whether be it Gujarat Pipavav, whether be it Adani Port, you might find that a higher amount of ROC is produced and probably potentially produced, I think, for even further business going forward. So to begin with, I think we have always considered this particular opportunity in infrastructure into the port space, and we believe that, I think, after looking at roads, airports, ports and power, I think we find that the seaports would be the better option to stay invested into the infrastructure space.
Devin, I know the house view and the house view on Adani Group stocks is that at these levels, Adani Group stocks, they offer good value. But even though these businesses are growing, why are most of the Adani Group companies available at a 52-week low?
Yes, Nikunj, I think it's always a question. The few reasons, I think, which are other than fundamental reasons, which I know for sure that I can share with. The issue is with the promoters holding in this particular company is relatively on a higher side. But whatever the holding which is still there with the investors, who are typically FI investors, because of the pressure back home, particularly due to the depreciating rupee, they are forced to withdraw money from different markets of the world. And that's where I think they have ended up selling most of their investment. And one of the portfolio investment was Adani Group investment with some of the large size FI funds. That is where I think the stock has come down significantly. And in absence of any serious long-term fund coming into the market and buying into the markets, probably I think you don't find the buyers, and as a result of it, the stock's going down. I don't think that anything has gone wrong fundamentally for this company. Probably I think the power business is passing through some kind of a situation problem at this point of time, which would get corrected over a period of time. And otherwise I think the port business continues to do well, and the coal business equally continues to do well. So I don't really think that anything has fundamentally gone wrong. Maybe I think the situation of not finding long only investors into the market is affecting many companies, including companies like Adani's.
Do you think the lead indicator for Indian equities once again will be rupee, and for Indian markets to bottom out, rupee has to bottom out first?
Yes, Nikunj, I certainly believe that. I think if rupee definitely gives some kind of a direction, then the buying would take place into the market in direction on the appreciation side. How would it happen? I think we are pretty much clear that I think the current problem with the rupee is due to the retrospect provision that the government has levied on, as a result of which most of the global investors and including FIs have started pulling out their money. If the retrospect provision is implemented with prospective effect, I clearly spelling out that I think there is no retrospective tax provision, next tax levied onto the companies, then in such situation, to my mind, I think rupee will first indicate the signs of stability. It would probably start appreciating. Again, I think if the rupee is appreciating to somewhere around 50 odd levels, 50-51 levels, then in such kind of a situation, a lot of money can come into this market, and that can indeed stabilize all the equations on even the macro fronts. So to a greater extent, rupee would be the direction provider as of now, along with the weather god, the monsoon, for sure. I think if that two things combines, probably I think one would see the market looking up and probably start appreciating from current levels.